The world changed. We have war in Ukraine and a really tough situation currently, of course, for all the people there. But here in this scope is the market, and also here we have some changes. So let's have a closer look on the precious metals. In this case, gold, silver, copper, and some others. So stick with me and let's have a closer look what we can expect here. Yeah, you may have realized normally I'm talking in a really happy voice, talking about the markets and the world situation, but currently it's tough to do that with the war situation in the Ukraine. And I really hope for everyone, for all people around the world, that they can live in peace and that they will not be harmed by anyone. So this is something I want to talk about you before talking about the market, because it seems a little bit cold-hearted to talk just about the financial situation, but this is what we are talking here in this video channel. So this is our focus for today as well. In this case, it's the precious metals, as I've mentioned before. And of course, this has a big impact on prices of commodities in the whole overview of all the commodities, but also, of course, with the precious metals, because many people are thinking and hoping that this is a safe haven where you can park your money even in these tough times and not knowing what is happening. So don't expect me getting politically here in this video. We are just talking about what the price situation is, how it was in the last week, and what we can expect for the next few days or maybe a longer period of time, and how we as traders are reacting on this. So let's start with gold, and there we have a really situation, a really interesting situation with a breakout through the highs here in May last year, 2021. There was a high roughly short below 1920, and you can see that the market was overshooting in a really strong way. You can see this here on a 4-hourly chart, for example. However, the market came back, fell back into the previous area here below this level, below this resistance level. And now the question is, what can we expect? What will the market do here? Of course, we have a lot of political influence, and many people are, I can absolutely understand this, are thinking, yeah, well, how do you want to decide what the market is doing next? Because whenever one country or one party, whatever, is bringing up some news or doing something different, or now the sanction situation, whatever is coming, we cannot foresee the future, because we don't know what the parties are doing in this case, in this conflict. That's absolutely right. And that's not the task we as a trader have to do. But what we can see is, in the price action, in the price movement, what the market participants in a whole are thinking about the current situation. So it's not so much about my opinion, it's not so much about your opinion, it's the collective opinion of all the market participants on all the actions coming around. So this is not not an instrument to foresee the future, to see, next will be, okay, the war will be over then, and the sanctions will do this and this. This is nothing we can see from the charts. What we can see is how confident the market participants are in the current situation, or how much fear is ruling the market currently, and what the reaction will be on a good news, on a bad news in the market. So this is what the market, what the charts are telling us. So let's have a closer look here exactly on the gold price, what we've seen here. So after overshooting this level, this was the first reaction, overshooting this on the in the market here to the upside. The market came down strongly again. So you can even see the 5-wave pattern here, which is a really typical one in the 15-minute chart. This is a really typical strong movement. We call this an impulsive move. You can see this is pushing the market downside here, to the downside. And now the market is meandering back and forth, something like this is the current movement. So we would call this part here as a corrective part of the movement, and this is the strong part, the trend following part of the movement. What? Trend following? The trend was upside, yes, but the latest strong movement is to the downside. This is not giving us an indication that the market is going to zero, of course, but is giving us an indication that the latest movement, the strong movement, the direction of the strongest movement is to the downside. And whenever this corrective pattern is over, we have a very good chance that this will continue once more. So I would never say that this, what we've seen here, the strong movement here to this part, is leading us into this box. Many people may have in mind that I was talking about the situation, maybe we see 1600 or even below this level. What we see here is not at all indicating that this will happen. This is only indicating that what we see here after a break, very typically, not in all cases of course, but very typically will lead to a continuation. So this is something I would have in mind here for the next days if the market is continuing in a really corrective pattern scope, which is looking like an ABC, for example, or looking like something really shaky into the counter trend. So it should move upside, ideally with higher lows and higher highs here in this case. So if you see something like this in the very next days, you may expect when the market is breaking through these levels here, the market will continue once more. But this is not changing the overall picture. Not at all. Some people are really bullish currently because they think the political situation is giving us a bullish indication. Yes, I can understand this. Normally, you would expect that in an uncertain situation, people are bringing their money into gold so as a safe haven status. Will this be the same this time? To be honest, I don't know. We have so many influences currently from many sides. We also have the interest rate decisions from all the central banks, especially from the US Fed. For example, we have the quantitative tightening situation. We have the inflation situation currently, which have really different indications in some places. What? Different indications? Inflation should lead to higher prices. Yes, but will this lead to higher prices in gold? Or will this bring, for example, the need for some people to sell their gold holdings to pay what they ever have to pay for example, for paying back some credits or loans, because the higher interest rate is killing their situation. And we also have the situation with the housing market in the US, which is also giving us some weird situation for the markets, which also can lead, not necessarily must need, but can lead to some people selling their deposits of gold to give away what they have here. Will this move the market? To be honest, I don't know, but I can see from the price action that currently the price action is not super bullish here. So in this case, what I've mentioned before would lead us to something like this. And you can see this is some really typical corrective pattern itself. And you can see that the latest movement here was leading upside. So there is absolutely a chance that in the aftermath of this drop, which may come, the market will continue to the upside. So you can see it is a little bit difficult. It's not a, what is your direction for gold? Yes, on a long term, I'm bullish. On the very long term, you can see I'm absolutely bullish. Both indications are leading higher. The question is coming here first or directly going there, but the overall picture is bullish in gold. I think at least the chances are very high that in the long future, gold will rise. The intermediate picture is not very bullish because I think that what we've seen here in this latest hours here in the market is leading us strongly to the downside. This needs to happen here in the next future, the corrective pattern here. We have some indication here that this may become something like an ABC pattern here. It looks a little bit like a sideways correction. It's more, most time it's the case if you see these at the same level here. Or sometimes this is even below, so it can be even a little bit lower here. You have something like an ABC pattern, which is a corrective pattern, which is really common. And in the aftermath of this corrective pattern, we can expect something like this to follow again, which is leading us to this level, maybe even to these levels here on the lower trend channel. And in this area roughly, many people may decide whether the market is going up or is going down. So until here we have a quite weak picture into this box. It can be the upper side. It does not necessarily need to fall very low. It can only be 1870, for example, something like this. Depends a little bit how far the market is rising here. But these are really typical movements. Of course, the market is not moving very typical. And I got a message from a friend asking me, shall I buy physical gold now? And I was telling him I want to buy physical gold as well, but to be honest, I see a good opportunity that the market is going lower before rising. But me as a trader, I'm not an investor, as a trader, I am willing to miss the opportunity of this cheap current entry price to get an even cheaper entry price. But if you don't want to miss this opportunity, of course you can buy this and hope that the market will rise without any deterioration directly to the north. Maybe you will have to wait a little bit for some month, maybe not years, but some month, when the market is going below this level first and then to the upper side. So to make it short, I think we have a very realistic chance that the market in the next few days coming down here a little bit more. However, this corrective pattern is not really easy to understand currently, because this is still missing. So this is needed for me to sell short the market for once more, at least for this size of a movement. And if the market after that around this level here, maybe you may draw Fibonacci retracement levels. This is roughly halfway of this movement here. So you can see this can be something like a setback level. You can also see maybe there's a support level here as well. Maybe from the trend channeling, maybe around this area you have some support, and we will see whether the market has the strength or not. So if you want to invest, maybe it's a good opportunity to wait for this level here, and when the market is returning here in a strong movement and coming down in a weak movement, you can enter the market here around these levels. You save some time because it is not necessary to buy it now. You can wait a little bit longer to enter the position, and you can have a cheaper price most probably as well. And in case the market is just plunging below this, directly going lower, then you're quite happy that you did not buy at that very moment here. If I'm wrong, or if you're a short-term trader, of course, you can also try to come into the market when you have some strong movement, something like this, something like an ABC pattern. This is missing here. You don't have this here. You don't have any opportunity to buy the market here. So if you have something like this, if this is happening, please keep in mind, I'm not able to see the future, and this is not what I have to do as a trader. If this happens, my other idea is completely wrong. Yeah, so what? I did not lose any money. If this occurs, I can buy the market when the market is overshooting, for example, this level here, expecting at least this. But if we reach this level, which is the typical target for this movement, the same here again, then of course, the lower prices are not so much interesting anymore, because we reached nearly the level again here, and we may think of, okay, we were overshooting this range strongly again, so maybe the market directly will go to the long side. So this seems a little bit confusing for many people not used to do what a trader is doing. Most people investing in the markets, they are feeling like an investor. They love what they trade. They have a relation to what they trade. Me as a trader, I don't build any relations to whatever I'm trading. So I'm not interested in gold, to be honest. I'm interested in price movements as a trader. So whatever happens, I'm never wrong or fault doing a mistake. It is maybe the wrong direction and I lose some money, but it's not like, my opinion is wrong, because I don't have an opinion. I just trade what the market is bringing me and what all the other market participants are doing. Keep in mind for the bigger picture that all the movement here to the upside is not looking what I love to see in a strong bull market. This is nothing which is giving what is giving me a good feeling to buy the market because other than here, you can see this is a strong movement here, strong moving into this direction. Also, this is a strong movement and so on. But what we've seen here from the lows here and even from the lows here, this is not a strong movement. We have so much overlapping. So still, you can see I haven't scoped this level here. I know many people hate me for saying something like this. But seeing this, I question, to be honest, I doubt a little bit. Everybody's talking gold should rise. And I can absolutely understand the argumentation. But I ask, so why don't they do this? Why are they waiting? Why are they hesitating in just buying it if this is a good opportunity? Most market participants don't see this. If they do so, they would not react like this. They would react something like this in a strong manner here. So that's the reason why I still keep in focus. This may happen. I see a really typical situation. The market is going here first, not necessarily exactly where I have drawn it, but I would not be super confident and no, there's no way it cannot happen. However, the current situation is really tough with the war situation in the Ukraine, and you have to expect nearly everything. So that's one reason more why you should not have your own opinion. Trust the opinion of the collective market participants, and they are showing quite well what they are feeling and what they are hoping for. If you see some strong movement, counter movement, continue the other one when breaking some levels here or on the way to that. If you see something like I've drawn here, forget all the short ideas, trade on the bull market. But don't decide by yourself. Don't let me decide what the market is doing. I don't know anything anyway. Let the market and the collective market participants decide what they want to do and say, okay, you want to go long, I'm with you. Okay, you want to go short, I'm with you. Whatever it is, trade the market, not your own trading ideas. So what about silver? It's roughly the same. The overall picture also has a really good chance. I've mentioned this many times before, so I don't want to talk too much about this, to reach this area here, because we are still in something like a bull flag, strong movement to the upside, a flag pattern here to the downside, which is a really typical corrective pattern here. And you can see that also here the up movement in parts is really strong. This one was really strong, but you can see the market is really shaky. They are not trusting themselves very much. You can see this by all these strong counter movements here, which is not a really good indication that people are really willing to buy that. So expect even here that the market is going down. However, currently I would at least have a closer look at what the market is doing here. If we see something like this in the very next days, I would expect at least something like this. Maybe halfway. You can of course draw some Fibonacci levels here. If the market is reaching this typical area here, and in this case you should also take into account something like a symmetry aspect. If you see something like this here again, not necessarily exactly, but you can see we are at the lower end of this one, which is also not giving a good indication for a bull market. But this is not 100% sure. Of course, for all the shorter term traders, you can trade something like this on the bull side. At least this is something you can expect most of the time. Same size, roughly same size, a little bit less than this. Sometimes it's getting higher. So you don't necessarily need to take profit here. What I normally like to do, I'm a profit taker. I always take profits, or normally, very often I take profits here and say, here the next decision is to be made whether this or this will happen. So I will re-enter the market after this, or re-enter the market after this from that very point. So that's my way to do this. I'm a quite active trader, but if you don't want to do this, you can keep your position, trail the stop and say, okay, for example, if you see something like this entering here and the market is reaching this area here, you may at least think, okay, I want to stay with the bull market here. I just trail the stop to my entry. When the market is coming down, nothing is happening. I just give away my book winnings here, my book profits. You just close your position. But if the market is continuing, you can say, hey, I'm still in and earning more money because the market is going into the right direction. So please be careful. Don't be overconfident with the markets. I think we have a really strong opportunity to see levels below 21. I'm not... I don't want to promise you this will happen, of course. Please don't think, this will definitely happen. I cannot go long and be sad when the market is running without you, if you do like this. So that's the reason why I constantly trade lower time frames as well, or at least watch lower time frames as well, whether they give me the indications that I need in this case. So let's have a closer look at copper. In this case, it's also, it's a copper future here at the COMEX, and you can see the price movement here to the upside. Beside of commodities, of course they have rising prices, but you can see this is not really, this is not giving me confidence in the price movement, definitely not giving me confidence for the bull market. This is something really, really corrective looking. So I would prefer, not all the time the market is giving me what I prefer, but if I see something like this, then we would have a typical corrective pattern, and then I can continue because this is a strong one, this is the weak one. So also here I'm bullish on a big scope. However, in a shorter time frame, I think what we see here is not really convincing me to buy the market. In between the movement, you can see this is just something for your eye training. We call it eye training when we're talking about this. If you have a strong movement, a shaky setback, expect something like you've seen here before at the end again, and then here the next decision is be made whether this will happen or this will happen. You may have in mind what I've talked to you in gold and silver. It's exactly the same situation. And if you are a little bit more active, you can trade things like this. On intraday scale, or sometimes even on daily scale, you see something like this here maybe as well. But if you see this, I would not recommend to be a long-term holder. Okay, most of private people are not buying copper and keeping them for a long time in a physical state at home. However, if you trade contracts currently, I would not bet that this market is in a really good mood currently. Let's have a closer look at platinum. Platinum is not really, really bad currently. This is the future currently. It was in a really strong movement to the upside. Let's redraw this here to make it a little bit easier. You see this 5-wave pattern like movement. And if the market is now giving us something like this part, the blue part I've just drawn, is looking similar to what I expect in silver and gold. And from here, at least here in platinum, I see a chance that this after that is giving us an opportunity to buy, because this is the lowest point. This is the current end, not necessarily the end forever, but the current end of this down move. We have a 5-wave move to the upside. And normally we can expect when the market is breaking this level here, the intermediate level here, which is not, please don't remind the number here, the exact number, because we don't know how big this is. We don't know where this turning point is and so on. But if you have something like this, you may expect the same situation here to the upside. You can see the behavior is exactly the same for the bull market, ABC to the downside and continue to the upside. It's exactly the same. You have a strong bear market, ABC or shaky to the upside and coming down to the downside. You can see it's exactly the same. So we are not bounded to some direction. Whether this is bullish or bearish, I'm not caring so much, to be honest. It is just following what the market is doing here in this case. So the latest movement here was a strong movement to the downside. It's exactly the same what we've seen in gold and silver. Expect something like a shaky move here to the upside and a continuation. You see this is a quite similar picture, and the same with Palladium here. You can see we have also this 5-wave structure. And you can also see, that's the reason why I did not delete these numbers. We had first resistance levels here. This was the first one. This one was the better one. And I want to show you that all these resistance levels are not 100% sure that the market is turning there, but it is useful to have a closer look what the market is doing there. Is the market breaking strongly? And is the setback in a weak manner. Here the market was strongly pushing through, nothing to do at that point, strongly pushing through, nothing to do at that point. When the market would come down here, ABC, and giving me a trigger for the bull side, you may have bought at that point, even at that point. I'm not a fan of this, to be honest. I would always recommend to wait for some setbacks, because after a 5-wave pattern to the upside, very often you can expect something like this. And after that, this is the same with Platinum, you can expect this continuation. So all of these markets have, on a lower time frame, the same indication. Please expect strong movements to the downside. We had this already. After that, a corrective pattern. Maybe we are currently in this. And a continuation once more to the downside here, which will lead us into the typical area of the Fibonacci retracement levels, 38.2. But this is too close because this is the first move already. But we need something like a corrective pattern, an ABC pattern. So we need, after the first movement, a break, a breather, and another one to the upside, to the downside, which may lead us, this is just an educated guess, around the 50% level, which is 2,121, for example, or this level here. This is also giving us some kind of a support here at that level. Some people may have on scope this one here. I think this is a little bit too short, but we will see which one will happen. Depends also how big this will be, because this is indicating how long this will be. So if you see the same pattern here and the market is coming up again, don't use this one anymore. This is done. We don't need this anymore currently. But if you see something like this, we can just roughly expect something like this here again. And from then, the next decision will be made whether we will get this one or a continuation to the downside. This will be made around this level here. So I hope this is helping you for your own trading decisions. It's a tough time currently. Expect the market to gap, to change the direction regularly. I know and I can understand that many people are saying, yeah, this is really tough time. If you're afraid of all these movements in the market, two things you can do: stay at the sideline and just watch the market, what the market is doing. Or the second one is reduce the position size. Because if the market is moving strongly, you have nice profits anyway. If the market is gapping or moving into the wrong direction, then the losses are not too super high, so you can still survive and the money is still there. Only a short portion of your money is away maybe. We don't know what the future is bringing, but with this kind of investigation on the charts, you may have a better indication for your next trading decisions. So this is not telling you the future, but this is telling you how you can more or less safely react on your next trading decisions. And hopefully, crossing my fingers for you, you can have the best out of it. So crossing my fingers for you, and of course hoping the best for all the people living in the war zone currently. Stay safe, trade successfully, and stay healthy.